Good morning, everybody. It's Tuesday, October 5th. Just going to run through the morning charts here. Here we can see gold. Yesterday I was mentioning it was topping out on this 1320 area and had done a triple top more or less. Yesterday it formed another top late in the evening there, drifted down through the morning, and this morning we're seeing a nice bull flag, a couple bull flags, and now it's just kind of hooking up here into the early morning. This is around the time we either get an early morning surge or drop. Looks like we're getting a bit of a move up this morning. Anyways, if I pull up the 4-hour chart of gold, you can see it's continuing its more or less trend channel here to the upside, and it's just kind of grinding its way each day a little higher and higher. And of course it's fed by the everybody knowing that there's quantitative easing going on, printing of money. Anyways, it's trading near the top of its range this morning, and we'll see how much higher it goes, but you can see overall it's trading at the top of the range, so it's a little overbought here, and we could see more of a pause through the rest of the day. Now if we take a look at the US dollar, this is what's really helping feed the gold this morning. This is a 60-minute chart, so this is a 5-day chart. This morning we saw the US dollar pretty much just get crushed here. It's trading back at the lows of yesterday, and that's how we got the pop this morning. It's also put a little upward pressure on crude oil and the US markets. Now if we take a look at crude oil here, this morning the US dollar dropped, so we have this steady climb up in crude oil, but really crude oil hasn't really made a new high, and we had this reverse happen last time when the US dollar was dropping. Actually, when the US dollar was moving up, and we saw crude oil make a double bottom, and then it reversed. So the fact that US dollar just got hit pretty hard this morning, and oil's trading back up at a previous high instead of a new high, it's kind of telling me that the US dollar is starting to get a little exhausted. Also, the fact that the US dollar has dropped and the equities market isn't continuing to move higher, rather it's continuing its choppiness, moving sideways. That's also telling me that the US dollar, the drop of the dollar, is not having as much of an effect on the market as it once did a few weeks back. So if we take a quick look at the SPY ETF, this is regular trading hours, 9:30 to 4. So I just wanted to point out again that we've had these, overall the price action has become bearish. We see strong selling, and then we see a bear flag, and the following day we saw another strong selling wave and a bear flag, strong selling wave and a bear flag. And so during regular trading hours there's lots of selling pressure, but the market continues to be held up by the US dollar getting pulled down each time that the market drops, so that the market will float back up. Now if we take a look at the intraday, the 24-hour chart, so here you can see pre and post market hours for the SPY. Now you can see these high volume spikes are the regular trading sessions, and here we have the sell-off and the bear flag, the sell-off and the bear flag. Yesterday we had the sell-off and the bear flag, and what we kind of notice, what's important to notice here, is we're getting a move up. Once the markets start to have a downward bias, we'll see them move up through the night on light volume as the market makers try and push the market up, and they let buyers naturally let it drift up. Anyways, it's trading right into resistance, and a lot of times what we're going to see here is a continued move down. We saw that just the other day. We saw the market move up in the morning through overnight trading, and then of course it got stepped on. So what the market makers are doing, they're allowing the market to walk itself up, and then they can sell when there's big volume in the market and get a premium for it, as opposed to just continuing to sell and the price moving lower and lower. So we're seeing a move up. I might take a short position, send alert out this morning, and I'll set a stop somewhere probably up about this high, possibly just above this high. So it'll be a quick trade if we do get a spike. I don't want to sit around for a higher stop. I'll probably set something around here if we do it. I do feel as though the market is starting to round out and starting to head down, so if we do get a higher high from here, I just want out and I'll reevaluate. But momentum is starting to go to the downside. We're starting to get bearish patterns and with price and volume action, so That's what I'm looking for there. If we take a look at the SP 500 futures, this is a 60-minute chart, and you can see this is a 200 period moving average. If we scroll back on in time here, you can see more or less in an uptrend where the 60-minute chart likes to ride above the 200 period average, and then in a downtrend it gets stuck beneath it. If you notice near the tops, the market tops, it starts to flatten out, becomes very choppy, starts to test the 200 more frequently. And same down with the bottom, you start to get choppy patterns, you get some pierces of it and then a breakthrough. Anyways, here we are now. The market's trying to hold up above it, it's getting choppy, and this morning or yesterday we had a break below it. We're getting a move back up, but we're into pretty good resistance level here. It'll be interesting to see if we get a breakdown and a continued move down, which would be around, we'd find support somewhere around the 1225 area. Usually you get a pierce of the low, which shakes out the stops. It'll cause a spike down, and then we'll probably find a bounce if from that level. So that's what I'm looking for in the market right now, and I'll talk to you in a bit. Bye bye.